Our next guest is also betting on agricultural commodities. Jim Rogers, chairman of Rogers Holdings, joins us from Shanghai, and he's attending the mica-based metals forum in the city. Jim, welcome to Asia Business Tonight. First off, I just want to ask you what you thought of China's move this week to cap prices on everyday items such as meat, eggs, and even cooking oil, and how that's going to translate into the price of soft commodities.
Well, Susan, price controls have never worked. Politicians have tried them all over the world for hundreds of years. They have never worked. They always lead to greater shortages and greater price increases in the end. If people can only get 1 ruble or 1 renminbi for raising a watermelon, they're not going to raise watermelons. And in the end, you're going to have fewer watermelons or fewer of anything else. It's madness. It has never worked.
Well, Jim, one motivation, or the main motivation behind that move was to rein in inflation. And in China's case, inflation stands at an 11-year high. You said in the past you're worried about inflation in the U.S. and the U.K. What about China?
Well, by the way, the U.S. and the U.K. both have inflation, much higher than they admit, than they acknowledge. They've been lying about inflation in both of those countries. China certainly has inflation. Susan, the price of copper is the same all over the world. The price of oil is the same all over the world. When prices are going higher, everybody has to pay those higher prices, and that's called inflation.
Well, Jim, when you say the U.K. and the U.S. and the governments there are lying about inflation, what's the real underlying inflation in those countries then?
Well, I don't have a clue, but there are people who've done studies recently, and they're showing it's anywhere between 6 and 9%, depending on how you measure it in the United States. There's one way, if you go back and use the old method of measuring inflation in the U.S., it would be over 10%. I don't have a clue, though, Susan. I haven't done the homework.
Okay, but you believe China's inflation figures then?
Oh, well, I believe that they acknowledge that they have inflation. That China says they have 6 or 7 or 8%. And they certainly do have inflation. Whether it's higher than that, I don't have a clue. I don't live in China, don't spend enough time here to know. I do know that even I notice prices are up in China.
Well, Jim, you're certainly bullish on China because earlier you said you were selling out of all U.S. dollar assets and buying into the renminbi as part of your assets these days. So are you picking up Chinese stocks then? Are you picking up Chinese property? How are you investing in the RMB?
Well, I haven't bought any Chinese stocks in a while. When I said that, Susan, I'm also buying the Swiss franc and the Japanese yen and agricultural commodities. I'm not just buying China or just the renminbi by any stretch, but I have been buying renminbi. I bought more renminbi today. I bought more commodities today. And I think those are wonderful places to invest, especially agricultural commodities.
And Jim, which commodities did you pick up today?
Well, I didn't pick up any specifics. My lawyers tell me not to buy specific commodities anymore because I'm always talking about them. I buy my agricultural index. It's called the Rogers Agricultural Index. That's what I buy.
Okay, well, let's talk about predictions. Hopefully your lawyer will allow you to talk about predictions in terms of price gains. But you were predicting that cotton, coffee, and sugar to gain the most this year. Are you still sticking with that projection, Jim?
Well, that's not quite what I said. What I said was if you were looking for agricultural things to buy, you might examine things like cotton, coffee, and sugar because those are still very depressed on a historic basis. Wheat is near all-time highs. Soybeans as well. Sugar is 85% below its all-time high. Cotton is 50% below its all-time high. Coffee is 50 or 60% below its all-time high. Those are the sort of places that I would be looking for new investments if I were looking at agriculture. I don't particularly like chasing things that are making all-time highs. I expect them to go much higher, by the way, but I would be looking at the things that are still depressed.
And Jim, Goldman Sachs says soybeans are the best commodity bet this year. Do you agree with that?
Well, they may be right. I cannot imagine it. Soybeans are, in the teens now. Soybeans are making all-time highs. The fundamentals are great. But I'm not the only person who knows that. So Goldman Sachs isn't either. I think you'll do better in some of the depressed commodities.
Well, certainly not depressed. Our gold prices. Where do you think they're going to go this year?
Gold? Well, I would suspect that gold will probably go down for a while, Susan. It's been so strong recently, and there's so many bulls on it. I own it, by the way. Don't misunderstand. And I would buy more if it goes down. But whenever I've seen everybody on one side of a trade, it usually calms down for a while. What I would suspect, and I'm a horrible short-term trader, I'm the world's worst market timer, I would think that my view would be the gold would go down for a while this year, and then end the year probably higher, maybe even much higher.
Jim, I got 30 seconds for you. Tell me your thoughts on Bernanke's stimulus package.
The man is an idiot. He should resign.
He should resign, that's it, but you don't think his methods will actually work?
He's printing vast amounts of money. It's ruining the dollar. It's making the inflation much, much worse. It's going to lead to much higher interest rates, long-term interest rates down the road. It's going to lead to a worse slowdown when the results finally work their way through the economy.
Okay, Jim, always a pleasure to speak to you. Jim Rogers.